Fundsupermart.com.
Japanese equity funds seem to generate a wide range of returns. For example, the 3-year annualized returns on Japanese equity funds on the Fundsupermart platform range from -1.5% to close to 10%. Does this signify a more inefficient market, and does more opportunities for active managers like Aberdeen to exploit?
We think the Japanese market is just like many other markets, not only Asia but across the world. There are always certain inefficiencies to exploit. But I think that the key thing is for us is really to look for good companies, and to invest in good companies over the long term. And we think that by investing in a good company over the long term and holding it, we should be able to generate better returns over time. That wouldn't only apply to the Japanese market, that applies to all markets.
The fund has a large allocation to the consumer goods sector at 28.9% of the portfolio. What are the reasons for this large weighting?
Many reasons. Within the consumer space, or rather what's categorized under consumer goods in Japan is things like the auto companies like Toyota and Honda, to companies like Japan Tobacco, which sells your Miles 7 cigarettes, to companies like Unicharm that makes diapers and feminine care products. So there's a broad range of companies within this category, and what we are invested in are exactly the companies that I suggested earlier. We have been very long-term shareholders in Toyota and Honda. We've known Unicharm for a long time. Japan Tobacco is not only doing very well in Japan, where it has a dominant market share, but it's growing in areas like Russia, in Central Eastern Europe, and even in countries like Spain, where it's selling its cigarettes. You see pretty stable returns, despite all the messiness in the economic environment within that country.
The top 3 holdings on the fund, Canon, Shin-Etsu Chemical Co. and FANUC Corp. on the fund as of its January fact sheet are the only companies that have more than a 5% allocation. Can you briefly explain the reasons behind these investments?
Yes, Canon is one that we like. I think over time it's shown that its products are very good. I mean, if you look around, if you go to any tourist site around the world and you look at the cameras that people are using, especially digital SLRs, it's essentially a duopoly between Nikon and Canon. And we like Canon for that reason. It's not only its cameras are good, they have a huge range of lenses as well, where they can make a whole lot of money. Canon also does photocopiers and printers, which essentially is it's just distributed across the world. And what it does is it sells its printers or photocopiers and it makes a whole lot of money from the cartridges, the ink cartridges. So it's very nice, stable cash flows, plus exposure across essentially across the globe, and in the consumer space as well through its cameras, and it's doing very well in China and countries like across Asia as well. Now Shin-Etsu does a few things, but 2 things that it does particularly well are silicon wafers, which essentially feeds into things like the semiconductors and so on, the consumer products that we buy today, from your iPads to all sorts of things, your PCs and so on. And they also do PVC. And these markets are oligopolistic markets. There are only few very big producers, and the companies that can produce all these things on the cheap and be able to export them at a very good price, with a proper cost structure, are essentially very attractive. And if you look over time, Shin-Etsu has generated good returns from these businesses. Plus, it's either number 1 or amongst the top 3 in the world for the businesses that they're in. So we like Shin-Etsu for its very long-term track record, or very good long-term track record. The last company that you mentioned is Fanuc. Now, what's Fanuc? Fanuc does two things very well. Okay, they do robot arms, which essentially is factory automation. Now, as you know, in China, wages are going up. And a lot of companies in China are starting to automate their plants instead of having the headache of hiring people and having huge turnover in their employees and so on. They use Fanuc's robot arms to help fix stuff or to manufacture whatever they're making, all the various widgets and so on. What Fanuc is also very good at is what's something called computer numerical controls, which that's essentially something like the Windows for machine tools, okay, and which you can use for machine tools, which essentially are make all your iPad cases, your iPhone cases, and all these types of things. And Fanuc's computer numerical controls. With that, you can control what the machine tools are cutting and so on, and what and all the intricate details that you require to make the casings for some of these things, from auto companies to the consumer electronics products. And in that market, there was 60% global market share. So very attractive businesses with very strong core products, very strong balance sheets as well, and these companies have been very good at returning capital to shareholders as well. So we find that these three companies are just very attractive for us.